And this is tonight, shockwaves from the collapse of Silicon Valley Bank have further pounded global bank stocks, wiping off $465 billion in market value. Assurances from President Joe Biden and other policymakers did little to restore calm. Now, Japanese financial shares, they were hit particularly hard as anxiety about a systemic risk sparked a wider rout in the market. Michio Yoshida reports from Tokyo.
It's a bloodbath for Japanese financial institutions on the Tokyo Stock Exchange on Tuesday. Investors dumped their shares as the fallout of the SVB collapse continues to spread around the world. But the impact of the U.S. banking crisis went beyond the financial industry. The Japanese yen strengthened amid expectations that the current cycle of interest rate hike in the U.S. could come to an early end amid the crisis. That's bad news for big exporters such as automakers, whose shares tumbled as investors expect a stronger yen to weaken demand for Japanese cars. Shares of tech companies, led by SoftBank, also fell. Meanwhile, Japan's long-term interest rates fell to the lowest level since November last year. It's lower than the Bank of Japan's target of 0.25%. Analysts said the SVB crisis has sharply driven up investor risk aversion, benefiting Japanese bonds, which are seen as safe assets. Japanese officials, including Finance Minister Shunichi Suzuki, have come out to assure investors that the U.S. banking crisis will have limited impact on Japanese banks and the economy. Analysts agree that Japanese banks and companies have limited exposure to Silicon Valley Bank. Still, they say, the fear is a confidence crisis, which could trigger a global financial meltdown, similar to what happened in the aftermath of the 2008 Lehman Brothers bankruptcy. Michio Yoshida, CNA, Tokyo.